Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, here with your market update for the beginning of November 2022. So the real estate market is continuing to experience softness across the board. A lot of the trends that we've been talking about the last few months have been continuing. However, we are starting to see more of an acceleration in certain metrics like days on market, pending and closed home sales are really just kind of falling off a cliff at this point. So things continue to be difficult, particularly for sellers with properties that maybe aren't priced well or aren't quite as desirable, and certainly for buyers as well that are maybe having a tough time qualifying for the type of home that they want, or maybe just are having challenges even obtaining financing at all for that matter, with the rates being so high, so on and so forth. So let's go ahead and take a look at the data in Los Angeles County, then we'll look at the South Bay beach cities. All right, so getting started in Los Angeles County, we see median home prices, amazingly, with all that's happening, are still up 1.5% compared to where they were a year ago. However, one thing that I don't see anybody really talking about is the fact that we're seeing more homes come off the market as expired and canceled listings, essentially unsold listings, than I've seen in my career in real estate. And one of the things that's interesting about that is we don't see the prices that those homes would have actually sold at, obviously, in this median home price data, because this is showing us data for homes that actually sold. So if we were to include that data in the median home prices somehow, we would probably see year over year price declines. However, what's happening is very little homes are selling, and the ones that are selling are kind of the cream of the crop, if you will, which means they're the ones that are still selling for a very good price. They're the most desirable homes. And for that reason, we're still in positive territory from a year over year standpoint, albeit at a much lower price point than we were, say, earlier this year. Now, moving on to pending sales, which I think is an important metric to consider, we see that we're down 53% year over year. We're kind of down there at the same level as we were at during the COVID lockdown, when we weren't allowed to actually sell homes at all. And this is a really good indicator of how weak the housing market is currently. I mean, if you go back here, all the way back to essentially middle of 2020, we haven't been anywhere close to this low during that entire time period. So definitely not a lot of homes making it into escrow, not a lot of homes closing currently. And here's kind of a break in the trend, or kind of a continuation to what we've been seeing. We're really starting to see the supply of inventory on the market start to break out to the upside. I mean, it's nothing spectacular yet, but it is a 22% increase compared to a year ago. And that is what we would expect to see. I mean, if most homes are kind of sitting on the market, they're not making it into escrow, we should start seeing inventory rise over time as a result of that. I mean, we're still not really that far above kind of the peak in 2020, or kind of, thereabouts where we were in 2021. So nothing too substantial, but certainly a lot more inventory sitting on the market compared to where we were, say, at the beginning of 2022. Moving on, I just wanted to show you guys what's happening with days on market, because we're up 75% compared to where we were a year ago at this time. And we're up at a point now where we haven't really seen since around the end of 2019 or 2020, which is right around 21 days on market currently. So it's taking a lot longer to get a home into escrow compared to what we were used to for many years. I mean, the expectation in the market is, I put my home on the market and within 3 days I have 8 offers, and I choose the best one or bid all the buyers up against each other, etc. Now, we're talking 21 days on average, and this, of course, applies to the homes that actually go into escrow and sell. I'm not sure that the homes that don't sell and come off the market actually get factored in to this days in market calculation, but regardless, we're up substantially, and that looks like it's really starting starting to kind of head upwards as well. Now, if we look at what's going on in the South Bay comparatively to Los Angeles County, we see that median home prices are still up 10.6%. So we're still in pretty strong positive territory in the South Bay. Again, the same caveat applies that we're not really seeing what the prices would have had to have been for homes that don't sell, that come off the market, factored into that data. But in any case, the ones that are selling are still selling for quite a bit more than they were a year ago. However, you can see here on the chart, we definitely have fallen off vastly from where we were, say, around May, April of this year, down to kind of where we are now. But it is interesting to see that we're kind of continuing now sideways, with this trend of prices kind of staying still much higher than they were last year, even with a substantial drop that we saw from earlier this year. But again, when we look at pending home sales in the South Bay, we see a dramatic decline. We're down 57% compared to where we were a year ago. We are down below the COVID lockdown lows, and essentially we're down below anything you can see on this entire graph going back to 2017 and beyond. So a very small number of homes are actually making it into escrow after being listed. At this point, only the cream of the crop is selling, the best priced homes in the marketplace. It's really a competition amongst sellers at this point to price their home competitively and aggressively enough such that they don't just help their neighbors who are priced better than they are sell their home. And finally, when we look at the supply of inventory in the South Bay, I mean, this is pretty dramatic. We are up 84% compared to where we were a year ago. Now, that is a dramatic increase. We're starting to approach 2.5 months supply of inventory. Now, obviously, in a balanced market, that is still very, very low inventory, but we're seeing it obviously really start to head upwards, to trend pretty steeply to the upside. And I would suspect as long as we see interest rates remain high or continue to rise, we're going to see a lot more inventory start to build up out in the market, a lot more options out there for buyers that are looking, etc. Of course, unless the Federal Reserve pivots next year and starts lowering rates, which is a very likely, possible scenario. So guys, I hope this information was helpful. If I could help you or any friends or family with any real estate needs, definitely reach out to me. Otherwise, I appreciate you guys watching, and I'll see you on the next video. Take care.